Last week I mentioned in my video that we would take a look at Lowe's for this week's Watchlist Wednesday. And for once, I actually decided to stay true to my word. So the company we'll be taking a look at today is Lowe's. Hey everyone, and thanks for joining me today. My name's Matt, and before we get started here, I just need to say, not advice, don't take this as advice. If you need advice, speak to a financial advisor, but this is just for your entertainment purposes only. Also, remember, if you like this video, it's a 5-cent donation for charity, and subscribing is a 10-cent donation for charity. I recently did update those numbers, and we're actually up to about a $46 donation, which is great, and I'm super happy about that, but I'd love to be able to get that to over $100 by the end of the year. So if you don't mind, the best way to do that is just either liking or subscribing to my channel. That way we can really help me reach that goal of donating over $100. Now, as I mentioned in the intro, the company we're going to be taking a look at today is Lowe's. I'm pretty sure everybody knows who Lowe's is, but just to clarify, we are talking about the home improvement store, not the grocery store. And what sparked my interest about Lowe's is last week, I believe it was last week, they had their earnings report, and they came out with a fantastic quarter. However, for whatever reason, their stock actually took a little bit of a hit. Now, I view that as a good opportunity to maybe get into a company because as companies are proving they have strong results, but their stock price is not reflecting that, maybe there's something that we're missing out on and could be a good buying opportunity. Now, I have talked about Lowe's in the past on my channel when I did a comparison to Home Depot, and actually that was about a year ago. So I figured for this week's video, we'll do another comparison with Home Depot because with it being a year, I'd be interested to see if these numbers have changed, or if there's any signs of my thought process of Lowe's maybe being the more growth opportunity, where Home Depot might be the more dividend opportunity. So starting off as always with the PE ratio, these are both pretty good PE ratios and they're not too much different from each other either. We have 21.05 for Lowe's and 23.09 for Home Depot. So both below 30, they're relative to each other, which is a good sign for me. And again, they're nothing too crazy in valuation. Now, the beta was a little surprising to me with Lowe's being at 1.35 where Home Depot's at 1.05, but I think that does give some support to my statement about Lowe's maybe being the more growth opportunity, because as companies are growing or expanding, then you should expect a little bit more volatility with that. Revenue growth, again, pretty similar for each other here. We have 27.35 for Lowe's versus 26.09% for Home Depot. So nothing too crazy there, and I'm sure that both of these companies are benefiting from a lot of people last year staying at home and doing their own DIY projects. But what really stood out to me was the EBITDA growth. Now, it's not a metric I've talked about in a while on my channel here. In case you're wondering, it's just a cash flow measurement. It stands for earnings before interest, taxes, depreciation, and amortization. You don't really need to worry about that. But what we do see is Lowe's is actually doing significantly better in this metric than Home Depot. Both are doing very well considering that these are not newer companies. They've both been around for a while. However, Lowe's at 61.02% gives them almost 20% higher of EBITDA growth than Home Depot at 44.01%. Now, I do believe one of the factors with that is the way that Lowe's is planning on growing their business, but I want to touch on that later on in this video. Also, as we all know, they both pay a dividend. Obviously, this is where Home Depot is a little bit more favorable, being at 1.94%. And again, I think that just further emphasizes my thought process on Home Depot being more of being more of a dividend play, where Lowe's is more of a growth play. And lastly, current ratio, both over 1, both pretty close to each other, 1.17, 1.10. Nothing really worth diving deep into here, but it does indicate to me that these are both financially sound companies. And as always, if we take a look here at how Simply Wall Street values this company, they use the discounted cash flow analysis. It does show Lowe's being around 7% undervalued right now. Again, take that with a grain of salt, but it is something that I like to always just check on to see if some other metrics do show some room for improvement or higher price per share in the future. Now, the one metric that stood out to me, and I just took a screenshot of this from Seeking Alpha, is when it comes to the return that these stocks have provided. So if you look at the bottom there, the 10 and 5 year, we can see that for the most part, Home Depot does much better from a stock perspective than Lowe's. But if we look at the 5 year and newer, again, for the most part, that's actually where Lowe's turns the table and provides a better return for investors. Now, the reason why that's significant is because the new CEO of Lowe's, took place around 3 years ago. I think it's just shy of 3 years when he started at Lowe's. And that is one of the biggest reasons I believe that this stock has been able to grow so well. Now, if you're not familiar with Lowe's CEO, Marvin Ellison, he's been around for a while and has been with many other companies before getting to Lowe's. Some that you might have heard of would be companies like Target, JCPenney, and he even did a stint at Home Depot. So he's a very experienced individual when it comes to working to these retail stores and has obviously been making changes that is helping Lowe's grow and head in the right direction. A few things that I know Lowe's is doing to help grow their operations. First one is their pro services that they offer, which is geared more towards like your contractors, plumbers, or people that work on construction sites. They offer dedicated parking spots like trailers and whatnot for them to go to. They have like cell phone charging stations, and they have the ultimate goal of minimizing the need of a contractor to go back and forth between Lowe's and their job site, which as a contractor, especially nowadays, those trips waste a lot of time, and time is beyond valuable for contractors who have a ton of work built up and need to be moving as efficiently as possible. Speaking of contractors at Lowe's, little side note or tip here, one tip that we use in real estate a lot to find the really good contractors out there is go to Lowe's as soon as they open. It's super early in the morning. It's like 5 or 6 in the morning or something, like maybe even 7 in the morning. But what you'll find is the contractors that are there first thing in the morning are usually going to be the hardest worker ones. They're the ones that wake up, hit the road, and get to their job so that they can get the job done. If you start running into contractors around 11 or maybe like 2-ish in the afternoon, those are usually the contractors that aren't as efficient as the ones that are there early in the morning. So, little side note. Another thing though that Lowe's is adding on to their business, and I'm surprised that they are just now starting this, it's something Home Depot's done for a long time, is the tool rental program. Now, I'm a huge fan of this program because we all know that those tools or appliances can get very expensive very quickly. You know, personally using as an example, if I need a pressure washer for whatever reason, a pressure washer is not the cheapest thing in the world. They're, anywhere from like $120 up to a lot of money, and I'll probably only use that maybe once a year. So for me personally, I would rather just rent a pressure washer. That way I don't have so much cash tied into this thing, and it doesn't just have to sit in the garage with the rest of the items I only use once a year. So I'm a huge fan of this rental program, and it seems to be doing very well for them. But again, I am surprised it took them so long to get to this when Home Depot's done it for a while. I know of people that have gone to Home Depot in the past over Lowe's just because they can rent like a tile cutter or something while also getting everything else they need to work on their projects. And I think those seem to be really the two biggest catalysts of their drivers of growth here. And that's something they actually talked about a lot on their earnings call. Now, from their earnings call, aside from like the normal numbers we look at, like growth and earnings per share, return on equity, and all that fun stuff, there were two things that stood out to me. They have $2 billion that they're planning on spending for capital expenditures, and a lot of that is going to go towards growing the company. Again, adding these features to the pro services or the tool rental program to help the growth in a company that most would say is probably pretty well established. The other thing is that they are doing about $9 billion in share buybacks this year. Now, I don't buy into stocks simply based on the fact that they're going to be doing a share buyback. But if you are a current shareholder, if you're still kind of adding on to your position, this is something that you'll like to hear because it is a reward to shareholders or an incentive for them to hold on to these shares. Because generally with share buybacks, you do get to experience a small increase in price per share. But if you have a large portion, that can obviously go a long way for you. Now, I believe they actually have about $17 billion allocated towards share buybacks, but only $9 billion of that will take place this year. And again, I'm not 100% sure on those numbers, so double check that if that's a reasoning for you to get into this position. So as many of you know, I did add a small portion of Lowe's into the portfolio last week, and I actually earlier this week added a few additional shares. So right now we have around 30 shares. Our average cost is about $189.64, giving us a gain of around $124.50. Now, I've said it numerous times about this portfolio that me personally at this point in my life, I am looking for more growth investments or growth-oriented investments. But with that said, I don't expect Lowe's to be a company that goes absolute gangbusters and we make a lot of money really quickly. I think it is going to be a more slow and steady kind of growth in the portfolio, but that's actually something I'm okay with right now because as we've seen with the stock market, it's incredibly volatile right now. If you look at it, it goes red day, green day, back and forth, where, again, we're following a Christmas theme here. So with a company that I believe is a fairly stable and sound investment that offers growth is something I feel is going to be a great addition towards this portfolio. Just take a look here at some of the other winners that we have going on. We have Sealed Air up $135 so far. Very proud to see that, because that's another company that I just don't really see how much they can really grow at this point. Microsoft is up $71, so that's cool to see. They are beating Apple, who's down almost $100. Blackstone was actually up over $1,000 yesterday, so it's taking a little bit of a pullback, but looks like we're starting to head back in that direction. So, as I'll probably say every week about that stock, that is absolutely incredible that it's doing that well, but I'm not complaining. Then we have the 500 index, VOO, up to almost $300 in gains. So overall, while yes, clearly this portfolio is in the red, and while most positions are losing positions, I'm actually pretty happy with the way it's structured, because Tesla is our biggest loser right now. Almost a $1,500 loss. So the ones that are doing well are doing all they can to offset that loss, and I think we have a few others that might make a turnaround and help really boost this portfolio back towards the green area. But with all that said, that is my thought process on Lowe's here. I'd love to hear your thoughts on Lowe's, if it's a company you have or if it's one that you're thinking about adding to your portfolio. And as always, please leave any questions you have or any stocks below that you want me to take a look at. I absolutely love looking at the stocks that you all suggest for me, so please let me know any suggestions that you have for me. Also, remember, if you like this video, it's a 5-cent donation for charity, subscribing 10-cent donation for charity, and I really want to hit that goal of over $100 by the end of the year in donations, so please do what you can to help me reach that goal. I would greatly appreciate it. With all that said, though, I'm going to wrap up here, so thank you so much for taking the time out of your day to watch this. You could be anywhere in the world, but you're right here with me, and I really appreciate that. But I'll let you go ahead, enjoy the rest of your day, and we'll see you next time.